What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we closed at brand new all-time highs yet again. The stock market continues to grind higher, and we're getting very close to the next price targets. First up, we'll take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, on SPY, we did go up 0.33% today and closed right on top of that price target at $417. The next price target is above at $420. And we are getting very close to that potential blow off top scenario. Remember that a blow off top is a rare occurrence, so don't necessarily expect one to happen, but do be aware that it is a possibility and start preparing for it now. In a blow off top, we're going to start getting an increase of volume and we're going to blast through these next couple of price targets. You can see we did get a little bit of increase of volume today, but that's not the kind of increase in volume that I'm talking about. There's still quite a few people trying to short SPY, and eventually they will get short squeezed and they will become net buyers, and we'll see a huge influx of volume as the price goes parabolic. That's normally when the top is very near, and then that should be followed by a huge wave of selling. So in a blow off top, we would start to go parabolic, and then we would possibly get into the mid 420s, possibly even close to 430, and then we would see a huge wave of parabolic selling. Remember, the market takes the stairs up and the elevator down, so there's still a lot of risk in this market. So while we do have higher price targets above, if we do break above 417, we're likely going to the next price target at 420. Above 420, we're looking all the way up here at $426. So don't try to call a top in a bull market, and please do remember that this is a very strong bull market. You don't need to get overly bearish in a bull market just because we're going to new all-time highs. Just reduce your risk exposure, don't take on as many leverage positions, and just carry more cash. Trade with less percent of your account and continue to trade to the bull side because this market is still very bullish. Downside risk is still way down here at the gap, where the 20 simple moving average is now crossing through right around $402. The bottom of the gap is right around 400 and the top of the gap is right around 403. As you can tell, the stock market has just been going up in a straight line, so there's really no foundation of support. Generally speaking, when the stock market's running like this, it does find support at the moving averages, but the strongest support in a bull market is always going to be the 20 simple moving average. You can see the price action has been staying above the 5 EMA, and that's how you know that it's a very strong bull trend. Eventually that trend will end and we will see a price action close below the 5 EMA, and that's when you'll know that the risk is increasing to the downside. As long as the price action's above the 5 EMA with this very strong bull trend, continue looking for my price targets above, and the next one, if we do break above 417 on Monday, is going to be 420. Now, we could find support at a higher low, and it is possible we find support somewhere around the $408 range. But that's to be determined, and we don't want to do too much speculation right now. We just want to continue to follow the price action and follow the trend. On the NASDAQ 100 QQQ ETF, we only went up about 0.12% today, but again, that was a brand new closing all-time high. You can see that we did break and close over that price target at 341.40. The next price target is above at 350, but I still think it's more likely that we're going to pull back to 334 before we get to 350. I could be completely wrong, and the stock market does continue to grind higher, and we do see the price action staying above the 5 EMA. Don't forget, we're in a very strong bull trend, and we do have plenty of gaps open below that likely won't get closed until we see the next stock market correction. So downside risk for the QQQs, I'm defining at this 334 level with gaps open at 332 and the next gap all the way down here at 325. We will have a pretty strong support level at the $330 range as well. The 20 simple moving average is crossing through that gap at 325, and it's currently sitting at 326. So if we continue to close over 341 and we build a base and we sort of build a bull flag above that level, that's going to increase the probability we get to 350 without any significant pullback. On the Dow Jones ETF, we went up 0.42% today and did get to that next price target at $341. We closed just above that level, which means we could be on the way to the next price target at 347. On the Dow, we're taking a much more slower climb up, and it's a much more healthy looking market because we're not going up in a straight line. We're going up at a nice 45-degree angle, and you can see that the price action is staying above the 5 EMA. The Dow Jones 20 simple moving average is now down here at $333, and we would have another support level right around 337. The gap close below is going to be right around $331. On the Russell 2000, we did stay above that bullish breakout today, and we continue to find support around that breakout level. So that support level is right around 223, and the 20 simple moving average is now trading at 221. The 50 EMA is down here around 220, and it continues to slope up with a positive slope, and we are going back into a full bull trend. So the Russell 2000 is still looking really good, which could be good news that the small caps are going to join this bullish rally. However, we're getting very close to critical levels in the other indices, and I'm not sure the Russell 2000 is going to all-time highs before we see a major correction after we get to those levels. So in the Russell 2000, watch the resistance levels at 227 and 233. Downside support is going to be 223, 221, and the 50 EMA at 220. Remember, if the Russell 2000 breaks below the 50 EMA, that's a sign that it is likely going into a bear market, so we need to see the price action staying above 220 on the Russell 2000. On the ARKK ETF, we continue to see that Cathie Wood is on the struggle bus, and the ARKK ETF is going down today 1.77%. That's terrible news for the ARK ETFs when the rest of the stocks are going higher in the other indices, and we see the triple Qs going to a brand new all-time high. So Cathie Wood's ETF continues to underperform the market, and that is not a good sign. We got another price action close below the 50 EMA, but we are slowly but surely building up some higher highs and higher lows in the short term. It is possible we're slowly but surely building up a bullish trend, but the price action is not confirming it because the price action is not staying above the 50 EMA. So upside resistance is now the 50 EMA at 126, and we will have another level of resistance at 133. Downside support, if the ARKK is trying to stay bullish, will now be the 13 EMA to maintain a higher low, which is right around 124. The 20 simple moving average is now down around 121, and don't forget about the gap close below at 115. On the VIX, which is the fear indicator, we continue to see the VIX going lower. Remember, a low VIX means low fear, and it means new all-time highs. Before we see a stock market correction and a drastic sell-off, we will see a spike in the VIX. So right now, the VIX is saying that everything is good and everything is going to continue to go higher, and there's absolutely no fear left in the market. So continue to watch the VIX, because as long as it stays below 18.2, we're going to continue to grind up higher and higher and higher and continue to close at all-time highs. On gold, we got to our second price target today, closing at 1776. The next price target is up here at 1826, and we're now going to have support right around the 50 EMA at 1760. On silver, we're on our way to the price target above at 2650, and we'll now have support at the 50 EMA, which is right around 2560. On Bitcoin, we're seeing a little bit of cool off ever since we got to all-time highs, but the price action is holding up above the 5 EMA, and we're still maintaining a bullish trend. We still need to get a break and close over the price target at 64,000 before we can get up to the next price targets at $67,800 and $70,000. Downside support levels are going to be right around 59,000, and the 50 EMA is now at 56,000. On Amazon, we went up 0.60% today and got another confirmation breakout. We did get a breakout a few days ago, and we failed to hold up above that level, and now we're breaking out yet again. So Amazon is looking really bullish, and it does look like it's going to try to break out to a new high, retesting that level right around 34.42. I also have a new price target for you all, which is right around 34.82. Downside support is going to be the retest of the breakout at 33.78, and then the support levels at 32.97 and 32.60. Note that the 20 simple moving average did get that bullish crossover today, so all the moving averages on Amazon are now stacked to the bull side, and Amazon is looking like it's going into a full bull market. Today we saw Tesla only going up 0.13% today, and Tesla's price action is still closing over the 5 EMA. We're slowly but surely building up a bullish trend on Tesla, and we're just waiting for that 20 simple moving average to close above the 50 EMA. As long as Tesla can stay above the 50 EMA at 697, it should be able to build back up that bullish trend and go back into a bull market. We will have resistance levels above at 762, the breakout at 770, and then the next price target is all the way up here at 802. Downside support is going to be the support level at 718 and the gap close at 704. We could also find support at the 50 EMA, which is going to be right around $697. On Apple, we dropped about 0.25% today, but we did hold up above that support level at 134. Apple still looks like it's trying to go into a bull market, and the 20 simple moving average will be crossing back above the 50 EMA very soon. The next price target above on Apple is 137, with downside support levels at 134 and down here around 130. There is a gap below at 128, but like I said with the other gaps, they're not likely to get filled until we go into a stock market correction. On the financial sector, we went up 0.71% today, still closing over the 5 EMA and still maintaining a strong bullish trend. The industrials also went up today, going up 0.22%, holding up above the 5 EMA and holding on to that really strong bull trend. The healthcare sector continues to do well, going up 0.75% and definitely maintaining that full bullish trend that it's in, closing well above the 5 EMA. The energy sector did drop today, going down 0.80%, and it does look like it's going to try to retest that 50 EMA. The energy sector is not in a bullish trend, and we need to see the price action stay above the 50 EMA for any hopes for the energy sector to go back into a bull market. So going back to the S&P 500, you can still see that we have some very bullish sectors, and we still have a very low VIX, which means there's still no fear in this market, which means we're likely going to continue to go to all-time highs. So watch for SPY levels of 420, and if we start breaking over 420, we're likely going to see that rare occurrence blow off top. Remember that they're followed by a huge wave of selling, so don't FOMO in at the top and don't think this market's never going to go down again. Anytime you feel like the market's never going to drop, you're usually getting very close to the top, and eventually the retail bears do capitulate and they turn into bulls just in time for a major correction. So don't be that retailer that's trying to buy at the top and thinking this market is never going to drop again. The risk is still defined way down here at the gap close at $400. And the higher we go, the more likely we're going to have a very drastic sell-off. You take the stairs up and the elevator down in the stock market, and we're still in the stairs up situation and we're still grinding higher. So be patient, don't bother trying to call a top, and remember that it is still a bull market and you don't want to be trying to short the market in a bull market. Also remember, on the Stocks Channel Discord, I'm giving intraday updates on the market to help you stay on the right side of the trade and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord community, you can find out how to join by clicking on the link in the description of the video. Next up is our trade idea Shopify, and we see Shopify flat today, basically going absolutely nowhere. The price action still holding up above that support level and the 5 EMA right around 1206, and we are starting to see the moving averages continue to stack to the bull side. We still need that 20 simple to cross back above the 50 EMA, and we could still find support at our 5 EMA at 1206 and the 50 EMA at 1180. Upside price targets are still going to be 1260 and 1316, with a possibility of breaking above there and closing the gap at 1360. So Shopify is still looking really good, and this little bit of a consolidation could be a good time to get back into this trade if you've been missing out on it. We still have 3 price targets above, and the price action and the trend are still looking really good. Remember, I bring more trade ideas to you weekly on the Stocks Channel Discord, which you can find out how to join by clicking on the link in the description of the video. So happy Friday, everybody. I hope you have a great weekend. And as always, I will see you in the next episode.